Calls of the day. We got a couple of them today. We're going to do Netflix first. Price target increased by more than 20% to $470 at JPMorgan. Reiterated overweight. Price target goes to $500 at Wells. Jason, snipe you first.
Listen, love the call here. What I will say about Netflix, and I think this is why I'm very bullish on the stock, they are really starting to monetize the existing base. The password sharing piece, this is not a project. This is not, hey, let's figure this out. It is starting to work. The ad-supported tier, I think, was discounted, and we're seeing some movement there. 5 million active users recently. That was recently reported. $7.99 per user. That again, if we're sharing, we're gonna make sure that you're paying for the services. So for me, when we talk about first mover advantage, I think Netflix is benefiting from all that they've done in this business, and I like it as the streamer in the industry.
Joe, you got it in the Joe T.
All based on momentum, clear breakout. Stock is up 37% year to date, but yet it's what? Over 40% below its November of 2021 all-time high. So relatively reasonable valuation when you compare it to some of the other streaming services like a Disney. Password cracked, the password crackdown has, yeah, thank you for that. Crackdown has helped.
Got you. That's why I'm
for
here.
Sure. But I think it's really been driven by a re-energy into the momentum itself. It's not so much the fundamental story. And I think a lot of the analysts upgrading the stock right now, they're trying to point to some form of fundamental factor that's been introduced. I think you have to call it the way it is. The stock's going up. It's gathering significant momentum. Positions are being rebuilt by fund managers. Could that take it to $500? Yes, it can.
All right. So the other call I wanted to get to today, too, was Mark Newton. He's the technician at Fundstrat. Biotechnology starting to lead within healthcare. Healthcare carry has been disappointing.
Yeah, very. Biotech
may be about to break out. He says it looks quite attractive to show relative strength versus healthcare. This is your wheelhouse.
Yeah.
Tell me about it.
I think it's a good call. If you look at the last couple of years, and 2022 was one in which some of the big names in healthcare, the big pharma stocks, had outperforming years because they were safe and defensive, and anything that had a lot of risk, such as biotech, did not. So this year, we've got more of a risk-on trade. If interest rates are peaking, which, perhaps they are, but they're certainly not going to go up the way they did last year, that's good for biotech because these companies need money. They need to raise money. There haven't been a lot of IPOs and certainly not a lot of secondaries, but that could come if the market keeps going. And there's so much that's in clinical trials, and the big pharmas need product. You have to be careful because these are very risky names.
Well, they're hit or miss.
Yeah, exactly.
But you don't own anything really in biotech right now?
Right now we don't. We're looking at a few names. We're looking carefully at clinical trials.
Well, what's the best name you're looking at?
Well, I'll tell you names that we've looked at, but we didn't buy. I mean, we looked carefully at Gilead. We've looked at Moderna. These are names that are interesting for various reasons because they have a lot going on and are low PE stocks, but have baggage with them. On the other side, there's names like, Biogen, Vertex, big name market cap stocks that have a lot of earnings, but also have some problems on the clinical side. But, maybe they can overcome them. And there are a lot of names under 10 billion to look at.
Okay. You like Brian Belsky, you like biotech, you like healthcare?
Well, we downgraded healthcare to help fund the technology trade, but we love biotech, and we've owned Gilead for a long time because it has hair on it, because it's a value stock, and it's growing the dividend. And we own Amgen too, as well. So we think biotech is where we're going to see a lot of strength in healthcare.
Yeah, Joe, you have AbbVie, IBB, Moderna, Regeneron, Merck, United Health, Bristol Myers, Humana, Intuitive Surgical, J&J, Lilly, Thermo Fisher.
And personally, I bought IBB believing that biotech was about to break out. It hasn't. I mean, let's be clear. In theory, this is the right place to be, but in the practice and reality of what Price is doing, it's been incredibly disappointing. It was probably about 3 weeks ago. I thought we saw a breakout in CRISPR Therapeutics, which is a favorite biotech name with a lot of growth behind it. That breakout has kind of stalled out. So I'm still in the IBB, but I have to admit, it hasn't worked just yet.
Okay, and we'll see if it will. Down 2%. Year to date is the IBB.